All right. I think we're good. Let me just double check. Looks like we're just fine. What's up, everybody? If let me switch up one thing. Here we go. Uh, there we go. Okay. Looks like we're good. Okay. Boy, what a wild day in the market today. Jesus. Rudy Brown said, Dylan Daniel, hey, how about you slow your roll? Because the market was sinking. All right. We're going to get into that in just a second. Chill the F out. I already knew somebody was going to comment today. You did not disappoint in the first 30 seconds. So thanks for being the douchebag of the day, Dylan. Um, anyways, I mean, all I have to do is show you the SPY. When I put this title out, that's what happened. The market synced. It did. We haven't brought out the douchebag of the day in a while. Here we go. It's already starting. I mean, listen, when I wrote that title, this is what was happening. And then this went up. It sank. Did it not? It sank from its highs from 440 and it came down. It happened. It did. And now it's rolling back over. So chill out. We're gonna talk all about what's going on in the Fed and all kinds of other stuff. We also have earnings after hours we're going to get into as well. But first, let me go ahead and welcome you guys to Own the Chaos. The stock market is crazy and chaotic, and we've made it our mission to help you guys own it. What an unbelievable day. Rudy Brown just said, I got whiplash. And, bro, me too. I think everybody's got whiplash today. The Fed came out and talked and is still kind of sort of talking. I think they just closed their remarks or whatever. Questions were answered. And the market has responded in all kinds of different ways. We're going to break that down. But let me get on to the starting five real quick. John says, I got John Gosson, Rudy Brown, Beka. I'm never going to get that name right. Beka Twoon, Savvy Money Show, Tiger's Edge, Ralph Van Hook. You guys are our starting five. Thanks for showing up early. We got 31 of you guys hanging in here. Want you guys 40. It's going up. Oh my goodness. We got boner candles here on Own the Chaos. Hit the like button while you're at it, while you're coming in, while you're walking through that door. Mike Hudson, I like the response there. Says you did add question marks to the title, so you're covered either way. I know how to cover my ass. Dylan, it's all good, bro. So yeah, I mean, Jesus, market goes crazy. It opens up on a tear this morning. The Fed comes out, makes some crazy remarks that people didn't like, and then it sinks. And then Powell comes out and starts answering questions, and then it goes back up. And then now it's starting to come back down again. Let's just take a look at what's going on in the market. The fact of the matter is that if you weren't watching the market today and you just happen to show up at the end of the day today, you're like, oh, not a bad day. But if you look at what's going on intraday, it is unbelievable. I mean, we opened the day up some. We were up quite a bit, around about 0.5%, I should say. This is the S&P, the SPY. And then right out of the gate, right as we were getting to the open, it started to sell off, and then it sold off pretty hard into the open, and then it started to rip. Pretty good. I actually ended up adding to some stuff, and this morning during this period of selling here, because I thought that perhaps we would see this happen, and then it started to go crazy. Fed starts talking, the meeting minutes come, or the meeting remarks come out, and then it goes up, does really well, and then we see this huge move down, and then the Fed, Jerome Powell, starts talking a little bit more, answering some questions on tapering and when interest rates are going to be raised. And then it started to move back up, and now we're seeing it come back down again. It's just been a seesaw of a day. I mean, just unbelievable what kind of day we saw today. And it's interesting, right? Because we talked about this leading up to today, that we were going to see some choppiness in the market. The choppiness is an understatement right now. I mean, holy shit. But it's it's not surprising. I don't think anybody should be surprised about what's going on. So what happened? What did Jerome Powell actually end up talking about today? And what came out of the Fed meeting? So there were some things that in there about just kind of referring to the economic recovery that we are seeing, and that tapering will continue to take place. I mean, we've been hearing about this from Jerome Powell, that they were talking about tapering, and now they're talking about tapering. So we're working our way down that timeline. And I said, listen, Jerome Powell isn't going to give us any surprises that we're not already prepared for, and that's exactly what happened in this meeting today. Talked about tapering as early as maybe November, December. The only thing that I am a little bit surprised about is that the length of time that this tapering is going to be taking place is a little bit shorter. Usually you see tapering, 12, 13 months, somewhere along that line. And it looks as if they want to be done with tapering by the middle of next year. So summertime of 2022. So that's a little bit faster than I think many people may have expected. He's still standing by the fact that he thinks that some of the inflationary trends that we're seeing right now are transitory, which, no surprise again. I don't think anybody should be shocked that he hasn't changed his tune on that. One thing that I think that actually was the reason the S&P actually made its move, or the overall markets actually made its move here. So this is when as the selling started, when we heard about the I guess velocity in which we'll see the tapering take place. And then he mentioned that, there really isn't any hint of a rate raise or rate hike until probably late next year, if there's going to be one at all. And he kind of backpedaled a little bit, mentioning that, of course, anything can change, which in my opinion is probably just a CYA comment. I mean, I do that all the time, right? I think this is going to happen so that nobody comes back and being like, well, you said. So there's definitely a CYA aspect to this, but overall, I thought the meeting was fine. I don't think there's anything that anybody should be worried about or anything that anybody should be surprised about. At the end of the day, I thought Jerome Powell's done an amazing job navigating through this entire pandemic. And we're continuing to see that. We always talk about not fighting the Fed, and we're not going to. We're going to continue to kick the can down the road as far as that's concerned. Now, what I will say is, okay, there is some areas that you may want to consider looking at if we do see some rate hike increases sooner than expected, or we start to see an acceleration of that tapering. Maybe it happens in the early parts of next year. And that if that timeline gets moved up, I got an area that I think that you really want to pay attention to. You want to pay attention to it anyway, but especially if we start to see rate hikes that take place, if the 10-year starts to move up, that's going to be a crucial area to watch for, and maybe a place that you may want to consider parking your money at. Before we get into that, though, I want to let you guys know that this show is brought to you by the Chaos Crew. If you guys hit the like or the join button next to subscribe, hit the like button, of course. But if you hit the join button next to subscribe, you'll get to be a part of the Chaos Crew for $4.99 a month. You get to support the channel. You get the studio behind us. Everything that we give you guys as far as content's concerned is supported by the Chaos Crew. So if you guys hit the join button next to subscribe, we give you a watch list every single day before the market opens, with plenty of time to make determinations on where you want to go look. This isn't a buy list, of course. It's just kind of a guide to say, hey, here's what's moving today. You might want to take a look at that if it interests you. We give a breakdown of 5 stocks that we think might actually make some pretty decent moves. We give a very detailed breakdown every single day. Not only that, but you get access to our Discord group as well. A great community, all kinds of other good stuff. There's level 2 Chaos Crew folks. They get access to my portfolio, as well as a trade alerts if you're interested in following me into some stuff. By the way, we're kicking the market's ass. Just saying, just putting it out there, kicking the market's ass. If you want to be a part of the Chaos Crew, make sure you hit the join button next to subscribe. Love to have you guys over there. Good afternoon from Lakeland, Florida, says Kevin. Welcome from Lakeland, Florida. We're in Maryland. I'm in Maryland. Anyway, by the way, Fat Man Zoom's not here today yet again. He will be back tomorrow, sort of. He's going to be on location, but tuning in tomorrow with us. We got Freddie, Thursdays with Freddie. I feel like we should do Fridays with Freddie, but I love having my Fridays off, so that's not going to happen. We both do. Batman Zoo and I both love having our Fridays off, but it'll be Thursdays with Freddie. If you guys haven't been a part of the stream when Freddie's around, it is very interesting to say the least. The man is hilarious. We just like to bring a little bit more color to our Thursdays. It's the last day of the week for our daily streams, and it's going to be awesome. We got some really good content coming up for you guys. You're not going to want to miss it. All right. So what happens if we do see an increase or a move up in the timeline of a rate raise from the Fed? Or what happens if the 10-year goes up? We're starting to see inflationary, trends getting haywire. Not that we haven't already seen that a little bit, but people start to buy into the fact that it's not transitory. What goes on then? One area that you really want to take a look at, in my opinion, I think that this is certainly a very important area to look at. And this can be the financials. We take a look at the XLF, for example. We take a look at the XLF, for example, and it's obviously having a really good day today, but it's corrected quite a bit. Now, if you're a bank that basically makes their money off of interest rates, especially when it comes to loans towards businesses and homes, mortgage rates, all that good stuff, you're going to benefit from a rate raise, from interest rates going up. So the XLF is a financials ETF, so it's tied to the financial sector. You got heavy hitters in here like JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, Wells Fargo, all those guys. They're in here. So you can pick a bank out if you want, but if you just want exposure to the industry, take a look at the XLF. This has done extremely well at holding support at $36. Extremely well. I mean, I had this $36 support marked way back here, and it has done nothing but hold up since I had that area eyed up. We had a couple of fake outs here, but it popped back right back over that mark and has held over 36 remarkably well. This has had a huge breakout. If you guys recall, I've talked about the XLF and the financials since January and mentioned that we were going to see a huge breakout on this. Let me zoom out for you, just kind of give you perspective. And we're going to go to the weekly chart just to kind of give you an idea of what I was looking at, in the beginning of the year. February of 2020, it came up to this area around 31. And then obviously we know what happened after that. And then it came back up at the beginning of this year, retested that support. And I said, hey, watch this area. We're going to see a massive breakout if we get it above this resistance. And it did. And it's continued to break out as we are seeing the economy get back on track. And now we're hearing, that the Fed's going to potentially start raising rates at the end of next year. And we're getting this taper talk happening. So the XLF is definitely going to be, and just the financial sector in general is going to be an area that you may want to keep your eye on. Could be an area that you want to, park your money. Now, what I will say is, and a lot of people might be rolling their eyes, this isn't sexy, B. It's not sexy, Brad. Who cares about owning stock in Goldman Sachs? Goldman Sachs is up 50% this year. I don't know what do you want? And it's Goldman Sachs is going up 50%. Nice and steady, by the way. Hasn't been like these AMC moves that have just gone all over the place and you're looking this way and that and wondering which way is up, right? It's been a nice steady move. And I'll give you an example. I'll show you the chart here. And I think that these banks are going to continue to rock and roll going into next year because if interest rates go up, they're going to benefit greatly. So let's say Goldman Sachs, in my opinion, is probably going to be the bank that I actually own Goldman Sachs personally. So full disclosure, I do own it. But there's a reason for this. I think that the small exposure, the lack of exposure that they have to the housing markets and that they're more focused on trading and investing side of things, I think definitely helps them. The interest rate side of things is going to also continue to benefit them just as much as it would anybody else. So we look at Goldman Sachs, for example, working our way back up to resistance at around 393. If this goes back up over that, which I think it will, not only is this a technical resistance, but it's also right at the 50-day moving average, which we know what happens every time we see, not every time, but many times we see a stock move up over that 50-day moving average. It's like a little kickstart for it. It's up 3% today, but I think that there's definitely more meat on this bone. I mean, it corrected from $420, $420 a share. What would have made this better if it was $420.69, but $420.76 is where we got it. the previous high. When we get up over that 50-day moving average, and I think Goldman Sachs is going to continue to do extremely well. I'd be surprised if this wasn't one of the leading markets going into the end of the year and into the beginning of next year. So, we'll see what happens. But this is definitely an area that I would focus on if I was worried about accelerated rate hikes or accelerated tapering, which I think again is kind of fast for the Fed to be doing this in about 6 months time. But we'll see. I mean, at the end of the day, you can only do things that are in your control, and we can't control what the Fed's going to do or what they're not going to do. But we need to have a plan in what we do if this happens or that happens. Take charge of the things that you can control and don't worry about the things that you can't. And I think you'll be just fine having a solid plan. If you like that, give me your thoughts. Leave some comments down below. Certainly would appreciate, your thoughts on it. Whether you agree or disagree, I don't care. Let me know. Let's have a conversation about it. How we all doing, by the way? We got 79 of you guys in here, 32 likes. The likes game is weak sauce. Can we get the likes up? I'd like to get it up to 60 plus today. Let's see if we can do that. Certainly would appreciate it. Got some really good questions in here. I'm going to start picking them out. Claudia has a Red Bull, by the way. She's super happy about that. She is in the Chaos Crew, so always love and support our Chaos Crew members. But Claudia has been an awesome regular on the show. But Dimitri asks a really good question here. Dimitri says, would you expect a substantial correction if the Fed raised interest rates earlier than expected? Yes. That will, or if we see tapering sooner than expected, or if it was more, if it was accelerated faster than we thought it was going to be, then yes, I would say that we could see a correction. I don't know if we'd see a full blown crash, but a correction, I would say, is almost a 100% guarantee. I'm not trying to scare anybody about that, but we've seen taper tantrums before. If you guys have been around in 2016, like myself, I was working for T. Rowe Price at the time. I was in the financial firm. I was in corporate America's. I was really literally on the front lines. Saw that happen in 2016, and Janet Yellen was the Fed chair at that point. It was not pretty. It was not pretty when they raised rates. People weren't really expecting the type of rate hike that we saw. And I think even if you were expecting it, it was still the reaction was not pretty. Could we see the same type of reaction? I think it's very likely. And again, I am by no means a bear in this market right now. I am 100% bull. But something like that happens, yes, I think we could see a potential correction for sure. All right. So that was a really great question. Appreciate the question, Dimitri. We'll get into a couple other ones real quick, though. Before I get into some more comments from you guys, we do have earnings today. BlackBerry, in case anybody's interested, a favorite among Wall Street Bets crowd. We'll certainly keep an eye on that. And then KB Homes. This is one of the first home builders that are going to be reporting during this, I guess, lull period, if you will. We have some good ones tomorrow too, Nike and Costco, but KB Home is going to be the one that I'm really the most interested in. We've got reports today that home sales were down for the month of August, which isn't really that much of a surprise. Everybody's out going on vacation. Nobody's buying a home. Nobody buys houses in August. It shouldn't come as a shock. Okay. So, but we're going to start to potentially see that pick up maybe in September, October. But we're still seeing ridiculous demand in real estate. The only way to ease that issue, that supply issue that we're seeing in real estate right now, is to build more homes, and we're seeing that across the board from D.R. Horton, which is one of my favorite home building stocks. KB Homes, another one. Lennar, Toll Brothers. Those are all going to be good ones to definitely keep an eye on. But what's going to set the pace today for all of those is going to be KB Home, because they're going to be the first ones to report. So should be a good one to watch for. So stay tuned. We're going to be live with that. I'll be giving you my reactions to that in about 10 minutes. So make sure you're sticking around. Before I get into that, I'll go ahead and, get to some questions here. Philip Stroh. What's up, Philip Stroh? Philip Stroh is a very active Chaos Crew member. I appreciate that, brother. I appreciate that. I appreciate anybody who's always active, always engaging. You guys are always making this. Well, you guys are what makes this community great. The people that interact and talk with us and interact is, or yeah, that's interact twice. Jesus, get your shit together, B. All right, give me a sec. So I am in Ford. I have Ford calls right now, which means that I am still remaining bullish on this. We'll pull up the Ford chart. It's actually having a hell of a day today. I have calls on this that expire in October, the middle of October. And I'll pull up the chart here to give you an idea of what I'm looking at. We're getting close to this 50-day moving average. The other day, it got rejected. It was on Friday, I believe, got rejected at the 50-day. Just briefly broke over that, had a little bit of a fake out. Obviously, Monday, Tuesday are what they are. And then today is having a very good day. My calls are at $14 strike, and they expire October 22nd. So I got a month before, to see this get up over $14. I think I'm going to be in good shape on this. So I am out of the money on these calls, but nothing crazy. And I don't really have a whole lot of them, but nevertheless, I got calls. I got skin in the game. And I think Ford's going to be a good one to kind of hang on to going into the end of the year. We have seen some issues with them as far as supply chain is concerned, and the chip shortage is certainly not helping things, but things are getting a little bit better. I had mentioned back in the middle of the summer that I thought the worst of the chip shortage issues were behind us, and I still stand by that. It's starting to look that way, and demand's still very much there, though. Ford's been pricing themselves in, or they have the pricing power, I should say, because demand's so high. So they practically naming their price on a lot of these new cars. Not only that, but their EV side of things has been doing extremely well. I'm very surprised that the Mustang Mach-E is doing as well as it is, only because I think that it should not be called the Mustang. Just looking at the vehicle, looking at that, it's not a Mustang. It's just not. But they decided to do it anyway. And obviously it's working out. So they knew better than I did. And I think that they have the strongest chance to actually compete with Tesla, coming from a vehicle manufacturer that isn't just dedicated to EVs. Of course, we've had the Lucid conversation, which also did extremely well today. We've also had a conversation about Fisker. Those are exclusive to EVs. Ford is not. And I think that Ford, being a traditional auto manufacturer, has the best chance to compete with Tesla as far as the EV front's concerned. We have lots of brand loyalty here. And I think we're on the verge of a reversal on the chart here for Ford. So I still remain very bullish on this. Wouldn't surprise me to see $15 by the end of the year, maybe. So keep an eye on it. I like it a lot. Oops. Hey, Buzz. Sorry about that. Hit the wrong button there. Boogala Brown says, do we need to be sitting on the sidelines holding dry powder in response to what I was talking about with the Fed? It's always nice to have a little bit of cash on the side for just in case. I think you can make arguments for having more cash on the side in certain situations, but in my opinion, the economy is rocking and rolling. People are spending money like crazy. Demand is through the roof on just about anything. I mean, we've seen retail spending going nuts. Travel is going to be coming back now, even more so. I mean, we saw Airbnb this week make monster moves, and the airlines are looking better because travel restrictions were lightened up for international travel from the U.S. So that bodes well for all the travel stocks. Just in general, I think the economy is going to continue to do very well, which is why the Fed's been talking about tapering. If we weren't doing well, then there would be no discussion about tapering, and we could be very well in the same boat that we were in maybe 6 months ago or 8 months ago, when we weren't doing so hot. Things are changing. I mean, I went to the football game last week, and it was amazing. There was a packed house. Usually, pre-pandemic, you go to a football game and it would still be pretty packed, but you could almost bet you'd have some empty seats around you. Didn't happen. It was completely packed. And, your boots on the ground, your eyeballs don't deceive you. When restaurants are packed, when sporting events are packed, when you're trying to go to that concert that you've been dying to go to for the last 2 years, essentially, let's just call it 2 years. Economy's rolling, baby. There's so many tailwinds coming for the economy that I don't think there's any reason that you need to have an excessive amount of cash on the sidelines, because if it's not working for you, you're basically losing value on it. So again, it's always smart to have something on the sidelines for the just in case if we do see pullbacks, if we do see corrections. But I think leading to the end of the year, maybe in the first quarter of next year, I think having as much of your money going to work for you as you can will more than likely, in my opinion, work out for you. But again, just my thoughts. Could be wrong. Going to take a page out of Jerome Powell's book and cover my ass on that. um, but thanks, Buzz. Thanks, Buzz. Appreciate you. All right, checking in some other stuff here. We got about 5 minutes before the market closes. I'm just scrolling through here to see if I can find any more questions that I like. Not really seeing much. So let me go ahead and just get into Facebook. So I actually have calls on Facebook as well, and they are for the middle of October, and it's rough. I'm pretty out of the money on them Facebook calls, if I'm honest. Now I told you guys yesterday, I've been really starting to get deep into options, into the options game. I had stayed away from them for the better part of a decade, started to work my way into them. You guys asked for it. I gave it to you. For the last month, I haven't lost on any of my options contracts. I've been doing really well with them. And I said, hey, this isn't typical. I'm not trying to toot my own horn here. This feels like anytime I go through this phase of like feeling like I can't miss, that's when I get nervous because I'm like, it's coming. The big drop is coming, and I'm gonna take a big loss on something here sometime soon. But Facebook could potentially be one of those. I tried to get as close to the money as I could on Facebook calls yesterday, and I could show you the chart here, and you can see where I'm sitting at here. Yesterday, I got 360 when Facebook was sitting at 359. I was like, it's just barely out of the trend. And in hindsight's 2020. I should have known better, because once it fell out of this trend, I should have waited to see buying return. That was my mistake. Willing to own up to that. But I got the call as close to in the money as I could at that time because I wanted to, I didn't want to go crazy out of the money. I didn't want to be nuts like that. So I got them at 360. Well, then I just continued to tank this morning. There was a big old gap down, and I tried it again, tried adding to it at 350, and that's still not working out. And you would have thought I would have learned my lesson from yesterday. I didn't. The only good thing is that I do have time on my side. I have about 3 weeks for this to right the ship, and I'm not that far out of the money. We'll see where it goes. Obviously, decay is going to play a factor here, but I still think that Facebook's going to do well. I have no idea why this is reacting the way that it is. It doesn't make a whole lot of sense to me, and it is very oversold. Look at the RSI down here. It is last time that we've seen it this oversold was back in the beginning of the year. And we saw a hell of a bounce. I mean, it came from $244, bounced all the way up to $285 from there. Now, I'm not saying it's going to make the same type of move, but Facebook, in my opinion, is always worth holding on to. It is. I think the FANG stocks in general are going to rock and roll leading into the end of the year. I probably should have played this a little bit smarter and noticed the trend a little bit better and realized that I needed to wait till the buying returned. People make mistakes, man. It happens. And I'm not saying anybody's calling me out on that. I'm calling myself out on this one. But I think hindsight, what I would have done better about this is obviously waited for some sort of confirmation for buying to return on Facebook. The other thing is, if I'm playing calls on this and I think that Facebook's going to do well going into the end of the year, I should have taken calls that expire out towards the end of the year, maybe even in January, to try to give myself a little bit more time to work with. 3 weeks time is not a whole lot of time. I just thought that we would potentially see a really nice bounce back today, and I was going to capitalize on that. But unfortunately, that was not the case for Facebook, even though literally everything else is doing well. But yeah, I still feel good about it. Claudia says, is the volume going on here? Looks like my volume's good. Rudy Brown's asking about volume. And everybody hear me okay? Real quick, just a quick pause. It's tough when you don't have somebody else with you. But I'll keep talking as long as everybody can hear me okay. We'll give it a second. But we got 99 people in the house. I'd imagine that I'm doing all right as long as we're good. Okay, cool. Thanks. Must be you, Rudy. Sorry, bro. We got 55 likes. If you guys could hit the likes, get that thumbs up, certainly would appreciate it. Let's get to 75. We got 100 people in here. Shouldn't have any problem getting to 75. Should be piece of cake. We got earnings. Okay. Earnings are on the docket today. We got BlackBerry reports today. We also have KBH, which is KB Homes. I mentioned that earlier in the show about 10 minutes ago. So these are two, obviously nothing, no blockbuster earnings today, but KB Homes, as I said, should set the tone for some of the other real estate, or at least home builder stocks. Your DR Hortons, Toll Brothers, Lennar, all those guys should continue, should maybe impact those today if we get good earnings from them. BlackBerry, it's a Wall Street Bets favorite. We'll continue to watch that, and I'll go ahead and bring my screen out here. We'll switch it on over to the 5-minute chart so guys can get some immediate reactions here. So far, KBH looks like it might be having some action here. All right, let's see here. Maybe not. Just looks like some pretty low volume there. So not much going on just yet. BlackBerry also no volume there to speak of. Hey, appreciate that, Savvy Money Show. Appreciate that, bro. I like what Phil's doing here. Thanks, Phil. Get those likes up. Certainly appreciate that. All right. We'll continue to watch this, guys, but hit me up with some questions. Actually, you know what? We haven't done this in a while. Let's do a roll call. We got how many we got? We got 97 people hanging out. Where's everybody from? Roll call. All right, let's do the roll call. Where are we at? If you guys haven't figured this out yet, if you're new to the channel, first of all, hit that subscribe button because you're in for some amazing content related to the financial world. Well, we're from Baltimore, Maryland, streaming from Baltimore, right in the heart of Baltimore. And man, what a city. What a city to be in. Dimitri is from the UK. Rudy Brown having a green day from South Louisiana. I love it. Bermuda. Braino from Bermuda. Ooh. Jakarta, Pittsburgh, San Diego, Harrington, Delaware. Hey, what's up, Bob King? I think Bob's my only subscriber from Delaware. Colorado, Zeeland, Michigan. I love it. Bluegrass State of Kentucky. Brad Harris. It's a good name, by the way. Just saying. Los Angeles, California. We got a ton of people from LA. Not a surprise, right? But good to have you, Norberto. Phoenix, Toronto, Huntington Beach, Anaheim. There's all the California people. St. Paul, Minnesota. Silicon Valley, Alvarado. I saw Daniel Camarena in here. He's also from California, from the FedEx warehouse in California. Yeah, my California peeps, they do show out. They show out. All right, so KB Homes, KBH looks like it is moving here after hours. Got a nice, decent boner candle going on. We'll see if this continues. As soon as I get numbers from KBH, I'll certainly give you those. The expectations for that are not pulled up. Let me get that squared away here. Hold on just a sec. Definitely unprepared for that. I'm telling you, man, when you're doing it by yourself all the time, you just kind of forget certain stuff. $1.62 was KBH expectations for their earnings per share. London. Ooh, we got Nick Vass from London. We got a lot of people from across the pond too. Lots of UK peeps that tune in. I love it. I love hearing from this is like my favorite part of being on YouTube. Is just being able to connect with people from all over the globe. Literally my favorite thing. All right. BlackBerry looks like it's starting to move a little bit. It's up 1.5%. There we go. Ooh, wow. Big old move here. Oh, man. Here we go. Boner candle. Boner candle on BlackBerry, and it is climbing 2.5%. It is up 2.5%. Who would have ever thought? Anybody ever have a BlackBerry phone back in the day? Who's old enough to have one? I did not. I had an ex-girlfriend that had one. Probably why she's an ex-girlfriend. because she had a BlackBerry. Estimated earnings per share were a loss of 7 cents. As soon as I get, you like how it just rolled right past that. Um, as soon as I get those earnings numbers in from BlackBerry, I'll certainly give those to you. Nothing yet from KBH either, but I'll get those out to you as soon as I can too. Look at this. This is still rolling up 3.5%. Come on. Come on. And feel free to throw them in the chat too. If you guys got the numbers, throw them in there. I'm looking right now. I got nothing. Hold on. But it is rocking and rolling right now. Earnings. Here we go. Let's see. Maybe. Nope. Just kidding. Still nothing yet. As soon as I got them, I'll give them to you. This is a huge short squeeze candidate. Back, when Wall Street Bets was going crazy over GameStop, AMC, all those. But man, it's still rolling. Still rolling here. Where is Arfin? I think Arfin took a vacation. Oh, man, we got some BlackBerry fans in here. We got some BlackBerry fans. Corn-fed country. Hell yeah, bro. Look at this. 1,500 shares at $12.80. Oh, well, you're still red, bro. I hope that's not. I hope that's not. I hope that's just your. Maybe that's your Ford shares. I'm gonna go on a whim and say Corn-fed country has Ford shares at $12.80. I sure hope that's the case, and you don't have BlackBerry at $12.80. Oh man, Bob K loved his BlackBerry. Bob, I thought I liked you, bro. Even Brad Harris liked his BlackBerry. The rollerball. I forgot all about that. Okay, it is Ford. It is Ford. Corn-fed has the Ford at $12.80. That's much better. That's much better. Thank you. Makes me feel a little bit better about you, Corn-fed. But anyways, well done, sir. Well done on the Ford shares. BlackBerry's coming back down here a little bit. Alonzo Gutierrez from Orlando, Florida. Right next door to Disney World. Still waiting on KBH. KBH hasn't really reacted all that much. Still have no numbers from BlackBerry just yet as far as earnings are concerned. But KBH, let's go ahead and take a look at the chart right now. It is up very slightly, just about 0.5%. Earnings came out and still waiting on the numbers. What is going on here? I thought those were going to give it to me. Got nothing. The BlackBerry numbers have to be out. Still trying to find those. But Arfin is MIA. That's all right. Hopefully he's on vacation doing something fun. Because if he's just not here because he's not here, we're going to have some words with Arfin. Be like, where are you at, bruh? Where are you at? What's up, Jeff? Jeff Polnick in the house? Yeah, I guess that's true, Bob. All right, so BlackBerry still doing pretty well here. It was up around 3.5% after hours. It's had a little bit of a pullback here. Still waiting on those numbers for earnings. Doesn't look like we got numbers out yet. I'm just very surprised. This might be the Wall Street Bets crowd making some crazy moves on this. Not sure what's going on here. It might get ugly. If that's true that the numbers aren't out just yet, it might get ugly here. So no actual numbers on that just yet. All right. Still nothing on KB Homes either. And that just turned red after hours. So no numbers on either one of those. All right. Checking back in with BlackBerry. BlackBerry's reports come out at 5 Eastern. If that's the case, then we're not hanging out here for that. But either way, it's looking pretty darn good here after hours. Now up 2.5%. KB Homes, I think that's the conference call, if I'm not mistaken, at 5 p.m. Eastern time. That's awfully late to be putting out earnings. KBH, still waiting on those numbers too. Taking their sweet ass time. So really, this move on BlackBerry is pretty unwarranted at this point in time. Just a whole lot of nothing happening. Let's just buy it up. All right, so KBH is actually moving. It's coming down here a little bit. KB Home, now down 4.5%. Big old gap down. It is shitting the bed right now. It's up down 5.5%. Those numbers have to be out now at this point. They have to be. Wow, what a tough move there. Okay, let's see here. As soon as we get those numbers, I'll be giving them to you. Let's see what we got. Revenues totaled 1.47 billion, up 47%. And so that's good. I don't know what the expectation was for revenue. Operating income margin improved. Give me what I want. Give me what I want, people. They missed on earnings. Estimated earnings per share, $1.60 compared to $1.62 expected. So that's one big reason why we're seeing this drop off. The revenue may save them. Let's see what they have on guidance. As soon as we get those numbers, I'll give them out to you as well. But and so that is pretty tough stuff. BlackBerry up 3% right now. Up 3%. Still rolling. Don't even have the numbers yet. As soon as we get those numbers from that, I'll let you guys know. But KBH missed earnings, $1.60 compared to $1.62 expectation. So that's why we're seeing KBH down right now around 3.5%. It was down as low as 6% after hours. But, man, that's tough stuff for KBH. As soon as we get other numbers and more information, I'll certainly be handing that off to you. But, man, pretty tough afternoon for KBH right now. But BlackBerry's still rolling. Anybody have any idea as to why? I think this just looks like Wall Street Bets BS. Let's see. Everybody wants a BlackBerry. I see this on Twitter. That's hilarious. Yeah, so no numbers yet from BlackBerry. It's just everybody just wants to buy some. Oh my God. All right. So as we wait, this is probably not going to end well, guys. Just putting this out there. If we're already building up towards earnings coming out and the earnings haven't even come out yet, this might get really ugly. It's continuing to climb here. It's up 4.25%. About ready to break $10 a share. Holy shit. There it is. There's $10. And now it's over it. We're over $10 on BlackBerry right now. Jesus. Still no numbers on earnings as far as BlackBerry is concerned. People are just buying it for the hell of it. Oh, man. When the numbers come out, guys, watch out. If you're in BlackBerry right now and you have the balls to hold this through earnings, more power to you, man, or woman, for that matter. Your balls are bigger than mine. Whew. While we're waiting on those numbers, I see Dan Dalton says, hey, I had 40 shares of Airbnb, trimmed out of 30, trimmed out to 30 now. So you cut a quarter of that. Average of 150. What do I do from here? Hold and buy more now. I don't think so. I think that, it really kind of depends on your own risk tolerance. Obviously, I have 120 shares of Airbnb and I'm pretty much break even on them right now. I'm actually holding. This is a long-term hold for me. I think the Airbnb is going to continue to do well. 170 has been a trouble spot for it as far as resistance is concerned. They got up over that today, got to 171, and then fell back down to this 169 area. I still like Airbnb. I think I'm going to continue to hold this longer term. I'm waiting for this to test the 175. I think 175 is going to be a really tough resistance for it. And if it can break over that, we could see a very strong breakout from Airbnb. But yeah, I like this one a lot. I think it's worth holding on to personally. If you took profits and you trim some position out and you still got some, if it were me and I was in your position, I wouldn't do a damn thing. You took some profits, so nothing to be ashamed about there. Nobody got hurt by taking profits, and just keep hanging out if that's what you want. As far as adding to it, it really just depends on your own risk tolerance. How much of it did you actually want? How much of it do you want taking up your portfolio? Are you comfortable with that? And if those answers are yes, then maybe buy it. But if that's the answer that you want and you want more Airbnb, I think I probably would wait to see if there's any kind of pullback. Airbnb right now is at 169.96. It's what it closed at today. So, yeah. Checking back in with BlackBerry, it is still rocking and rolling here. It is at $10.11, and earnings are not even out yet. This is going to be a giant mess, folks. A big ass giant mess. I got nothing. No reason whatsoever as to why this is selling or getting bought up. Oh, here we go. Numbers just came out literally just now. Estimated earnings per share of a loss of 6 cents. They beat expectations by a loss of 7 cents. The revenue is 175 million, and they beat expectations by 163.5. So those of you who had the balls that were bigger than it's paying off. Congratulations to you guys. I could not have done that. There's not a chance in hell I would have done that. But it is up 7.25% right now and climbing after beating earnings. A big old earnings beat too. If you guys are just tuning in, we gave earnings on KB Homes. They actually missed earnings, which is a little bit of a surprise. It's actually right on after hours trading, but BlackBerry came in and beat earnings at a loss of 6 cents per share, beating their expectations of a loss of 7 cents. Revenue was 175 million. Expected was 163. So they beat on top and bottom line, it looks like, as well. I would imagine that their guidance is probably pretty good. It's continuing to climb here. Yeah, the BlackBerry ball. Yes, if you have BlackBerry balls, I'm not talking about cojones. I'm not talking about testicles here. I'm talking about the BlackBerry ball on the phone. If you guys remember that. I mean, that's what Dan's talking about, right? He's talking about the BlackBerry balls that were on the phone. I'm pretty sure that's what he's talking about. It's up 6.5% here after hours. Congrats to those of you who are still in it and is still rocking and rolling. It just touched $10.34, which at that point I think was up around 7%, but pretty strong move on BlackBerry. Where can it go from here if we look at the chart? We're looking at the chart right now. If this opens above $10.50, this is going to be above the 200 and the 50-day moving average. So the momentum could very well carry this into higher highs here and perhaps a straight up reversal. If it opens tomorrow above that 1050 area, I mean, this is where the 200-day and the 50-day intersect. It's represented by this yellow and purple line. If it breaks up over that and it opens over that tomorrow, we could see, I won't say that we could see a very strong move, and it could start to make, tests of resistance here at around maybe $12 a share. That's what I'm seeing here. $12. Could BlackBerry make that kind of move tomorrow? It's possible. Wall Street Bets crowd catches wind of that type of earnings beat. They could start to get really excited about that, and we already know that it has pretty high short interest. So we'll see. I'm not going to be a part of it. All of those of you who have BlackBerry balls, more power to you. I hope it works out. I'm not touching it. It's continuing to climb here, though. It's up 7.5%, 8% now. Still rocking and rolling. So congrats to you guys who are in BlackBerry. Guys, that's going to do it for me. Tomorrow, we have an amazing show. Freddie's going to be here. Fat Man Zoom's going to be back. He's going to be tuning in from the beach. It'd be awesome if he was actually from the beach tuning in. I might have to convince him to do that. We got plenty of stuff to talk about. We have earnings from Nike and Costco tomorrow to cover, as well as anything else that pops in the market. We'll be covering those headlines too, guys. That's going to do it for me. You don't want to miss Freddie coming on tomorrow. I promise you that. You don't want to miss it. Freddie is hilarious. You're not going to want to miss that. So make sure you're tuning in. Make sure you hit the subscribe button. Hit that notification bell to get notified when we go live at 3:30 p.m. Eastern time tomorrow. And guys, that's going to do it for me. Hit that like button on your way out. I certainly would appreciate it. As always, I'll see you all before the bell. B. Smith is out.